Hello everyone. In previous section we discussed about the accounts receivables management, and in this we discussed that we can collect accounts receivables as early as possible if we make standard credit standards, and we make credit section criteria on the basis of these few standards. And we can also speed up the accounts receivables collection by using the credit standards or offering discounts. And the last was the credit monitoring. So on the basis of these four steps we can collect our accounts receivables as early as possible. In this lecture we discuss about the credit terms. So first of all, I'll discuss about the credit terms. So credit terms are the terms on which basis the company sell any product to the customer on a credit basis. So for example, if I discuss about the example of the credit term, for example, if credit term is net 30, net 30 means that if we sell any product to the customer and the credit term is net 30, it means that amount is due in 30 days. So this is a one credit term. If credit term is net 15, it means that amount is due in 15 days. So we can use credit term to speed up our accounts receivables collection by offering a cash discounts. Cash discounts, for example, if I talk about the cash discount, we can offer a discount on these credit terms. For example, there's one example of cash discount which is 210 net 30. So if we offer this cash discount to the customer, it means that customer can get 2% discount if payment is made within 10 days. If payment is made within 10 days, and otherwise if he will pay within 30 days or 15 or 20 days, he will pay full credit amount. And if customer pay within 10 days, their due days are 30 days. And cash discount mean 210 mean if customer pay this due amount within 10 days, the company will offer a 2% discount on a credit amount. So if we offer a cash discount to the customer, so some of our customer pay early their credit amounts to avail this discount. So that's how we can reduce our average collection period time, and we can speed up our accounts receivables. So this is also a technique company use to speed up their accounts receivables collection. And the third, I have discussed about the credit monitoring. So credit monitoring is much important, because if you review your system whether you are collecting your accounts receivables within due dates or not, then your average collection period can be reduced. And if you will not review your accounts receivables collection mechanism, then maybe your average collection period become much higher. So credit monitoring is important to reduce the average collection period or speed up the accounts receivables collection. So in credit monitoring, normally companies or financial managers review account receivables continuously, sometime after a week, after a month, after 6 months, after a year. It depends upon the company. They review the account receivables collections, whether these collections are within time or these collections are late. So the main question is, how can we monitor the credit system or whatever the system of the company has? How can we monitor the accounts receivables collection? We can monitor through two techniques. There are two credit monitoring techniques. First is average collection period analysis. Like if we do analysis on the basis of annually analyze the account savers. If our company analyze, I'm just assuming that if our company is analyzing the average collection period after a year, it means that every year I'll calculate average collection period. For example, I have a data of 2017, 2018, and 2019 and 2020. So let's say I have a data that in 2017 the average collection period was, let's say, 30 days. In 2018 it was 29 days, and here it was 32 days. But when we calculate for 2020, so our average collection period, let's say our average collection period is 40 days. So it means that in 2020 our average collection period is increased significantly, increased by 8 days from 2019. So it means that there can be any problem in average collection in collection of account receivables, and then we can resolve this problem. So by analysis of average collection period over the period of time, we can also identify whether our account receivables collection system is working properly or not, or our collection department is doing well or not. So this analysis can be done on the basis on after month, after week, after 6 months, after a year. It depends upon the management requirement. So now the second technique for the credit monitoring is aging of account receivables. Aging of account receivables mean break down account receivables into groups on the basis of their time of origin, on the basis of their time of origin. So if I just take one example, how can we break down these account receivables? I just want to share one example. Like if we have a age of, we can divide our account receivables into groups like 30 days, last 30 days account receivables, 31 to 60 days old account receivables, 61 to 90 days old account receivables, and 91 to 120 days old account receivables, and 120 greater than 120 days account receivables. If we divide all account receivables, our company account receivables, into these categories like 30 days account receivables, last 60 days account receivables, the last 90 days, 61 to 90 days, 91 to 120 days, more than 120 days account receivables. These are the groups. And if we divide our whole account receivables, if I assume that this company, this XYZ company today has a total account receivables amount of 2 lakh. So we can divide it into these groups like balance outstanding. So I can divide, this is the today's account receivables amount of this company. If I divide this 2 lakh into these groups, then I can analyze that in which group account receivables are increases with respect to past analysis. So like I have a data of this company like this. If I divide the 2 lakh, so our account receivables of 80,000 are lie within the 30 days range, and our 60 days, 31 to 60 days late account receivables amount is 36,000, 52,000, 26,000, 6,000. I have break down my all 2 lakh account receivables into these 5 groups. It means that how can I collect these data? The company financial manager can collect this data of 30 days account receivables, 31 to 60 days due account receivables, 61 to 90 days due account receivables, and 91 to 120 days due account receivables, and 120 more than 120 days due amounts of account receivables. We can calculate it through invoices. On every invoice there is a date that on this date this amount is due, and if from due date, from credit granting to due date, the days are lies between this range, I will put this money, the account receivables of this customer, in this range. If any of the customer has not paid in last 75 days or 85 days, I will put the account receivables of that customer in this category. That's how I'll divide the account receivables in these 5 categories. So this is the aging of account receivables. This is a schedule of aging of account receivables. How can it help to monitor the credit? I'm doing this analysis today, let's say in April of 2020. If I do this analysis every month, like in January 2020, at the end of January 2020, at the end of February 2020, at the end of March 2020, so I can analyze that whether these account receivables are increasing or decreasing. First of all, I will see whether this account receivable amount is increasing. If this amount is increasing, whether this amount is highly proportion of this amount lie in this region or in this region. If it is lies in this region more than 120 days account receivables, so it means that there's a high probability that this amount, these customer will become defaulted and this amount will become bad debts, because customer has not paid in last 120 days but amount was due in 30 days. So and if the major proportion lie in this category, so it is acceptable. But if the amounts are higher in other categories and lower categories, it means that there is this little bit problem in their average collection period or account receivables collection, so they should resolve this problem. So that's how, with the help of average collection period analysis over the period of time and analysis of aging of account receivables over the period of time, these both mechanism can help us to monitor whether our account receivables are collecting on time or not. If they are late, how much late, whether the average collection period is increasing or not. So we can monitor the average collection period by using these through techniques. So lastly, there is a question that if any of the customer is not paying their amount within due time, then how can we collect this amount from a customer? There are some techniques like popular collection techniques. At last, I'll just discuss about the popular collection techniques. When any customer will not pay you amount within due time, first of all, send a letter or send an email to the customer as a reminder that this amount is due and you are already late, kindly pay this amount. If customer do not pay amount after mail or letter, then call him and in call again remind them this amount is due, I've already mailed you that this amount is due and you are not paying this amount, kindly pay this amount. And after phone call, if he will not pay your amount and if he will not pick your phone, then make a personal visit. In personal visit, tell him that the amount is due and you are already late, pay this amount. And if will not pay this amount again on a personal visit, then sometimes some companies use a collection agency, and companies transfer their account receivables to the collection agencies. Collection agencies are normally a third party. If customer is not paying after reminder on letter, telephone, and personal visit, then company can convert this accounts to the convert these accounts to any other party, any other company. Then the other company will collect the money from a customer. But this is optional. Some companies use this option. And the last option is legal action. So that's how you should use this sequence. You should use in a collection of accounts receivables. First letter, then telephone call, then personal visit, then maybe collection agency, and lastly legal action. At last stage, take a legal action, send him a legal notice. And but in big transaction normally companies take a legal action, otherwise in smaller transaction they do not. So this lecture was all about the accounts receivables management. In this we discuss about the credit standards, credit selection procedure, credit terms, how can we reduce accounts receivables average collection period through offering cash discount. At last we discuss how can we monitor the credit system, our credit department of our company. At last you would discuss about the popular collection techniques. If we follow all these, our average collection period will decreases, and ultimately cash conversion cycle will decreases, and lastly value of the firm will increases. Thank you so much.